Okay, what's going on? What's going on? Good evening. Let's see here. Where's our order? Okay. Okay, so what we're gonna go over is probably the easiest buy position um, that we could have seen at the New York. But I will say the rest of the day overall, like outside of the push up that we were wanting to see from like the 4 hour time frame area, the 350s, the 300s, everything else I would say was pretty choppy. I mean, you spent pretty much, let's see here, on the hour, 1, 2, 3, 4. So about 4, almost 5 hours where they just were, I mean, they're going down, but they're just testing areas, testing areas, testing areas, and just making people form their opinions in these areas, right, that we still identify as areas where shorts could potentially cover and buys could step in. So, um, that was the game plan. Obviously, coming into it, it did start showing signs like it was going to do very similar to yesterday, where it's going to make another extension leg down, right? So they had the fair value gaps in the H1s where they were just like testing those areas, and they weren't going higher, but they were pushing over. So I thought they were going to go at least to 300s, but let's see here. Okay, so I need to bring this one over. Okay, so bring this. Which one was this? Okay, this one, this one, and we'll need 1 minute. Okay, so let's see. So, like I said, pre New York, pretty much the location was the main thing that we were looking at. The 4 hour demand candle, the 50% of it was here, 450s down to like 350. And then we were also looking at this wick, this area here. We were looking at this area for it to at least to go down to like 786, and then to see if buyers would step in and see if shorts would cover. And so at the New York, when you look at just like a 15 and 5, it's really um, it was really an easy, more of a play if you're anticipating for sure that that's what you're gonna do. Okay, so for me, I had yesterday in my mind, I would guess you could say, because I wanted to see the same almost situation for the extension down before they would go up, and so by doing that, we're looking for that 5 minute dump candle. We're looking for the sign of strength, and then on the right side of that sign of strength, the 1 minute mitigations. But at the same time, it's like it just sometimes it just can get you. And so I mean, we went 7 days, I think, of pretty much hitting 1 to 3, 1 to 5s over and over. So it was almost time. But this is the typical play that I like to see. Higher time frame context. I like to see fear of missing out type of moves. So like at the New York, when they capitulated right at the open and they fall almost 100 and some points in that first 15 5 minute candle, and then you start to see it rebound and shorts start to cover. It's like it's always the thought of what's high and what's low, right? Like we know that this is the high of the day, and we know at this point when price reached all the way down, right now that massive 5 minute candle that reaches just like that is also a sign that those shorts potential, like I said, could be covering is if the signs of strength start to come back into the market and start to play back up to the point of interest. Because like if I'm in a position, let's say I would have sold New York open down, if you would have obviously would have got your 1 to 3 partial, or you would have been out for the I think about it, almost a 1 to 5. But if on that sell down, right, you're gonna get stuck by trying to play that area, right? And then that's what I was looking for. I was looking for the sells down because of yesterday, and then it gets you stuck because you're like, damn, you forget about the buy. Now the area that I like, the second leg of the mitigation, I'll show that too, which was excuse me, when we popped above this area. So we made a low, right? Like this is our body lows, right? Price runs up and closes higher. That's a sign of strength, right? And so when it does that, a lot of people will just buy the breakout, and then price will just retrace back to demand, right? Point of interest again, New York Open. So price is like a magnet. It likes to go right. It likes to go away from these areas and come right back to them to revisit, to give opportunities, especially at the right times, right? And so the area that we were looking at, like on the 5 and the 1 minute to go into New York Open, was down in here. Now, this is what I was saying from yesterday, when you're looking at it from a 5 minute perspective, and that first 5 minute drop was price in that first 5 minute obviously goes from, let's see how many points that is. It's like over 70 plus points, right? Almost close to 100, I believe. If you go to the wick was like down in here. So that's 99. I mean, that's 100 points. Okay, so 100 point drop just in the New York Open candle, and the only way for those individuals who shorted that position to make a profit is for them to have their limit set, right? And for the market to start to buy up, right? A buy limit, or they're gonna see that they're up a bag, so they're gonna go in and press buy by market. And so when you look at this, we said we want to see a 5 minute dump, the sign of strength, and on that sign of strength playing even a 1 minute mitigation. Even the area that I thought, like say you didn't play this down in here, this little area, right? This would have been 930, or excuse me, 836, then 837 to 838. Like if you didn't play in that area, I still even thought that this area where basically the 5 minute and the 1 minute, basically like this one comes up and closes higher, then you get a pull back into the area. So it's like, okay, that type of situation is usually, higher high, higher low to then extend higher. That still was a good area. And then if you look at a 5 minute, we're always looking at that 5 minute to be in a certain location. It was below the 50% of the 5 minute area. It's like right in alignment with that. So the structure aligned with what we want to see from the 5 minute dump to the basically the entry model, so. And that's on the RSV setup. So if you're seeing the dump, the flush, there's overnight sell side liquidity, and then you're seeing a massive dump right at New York, that's usually a good recovery trade. Like let's say you took the trade from in here, okay, and you were looking for just a 1 to 3 to get up, right, and you took it in that 1 minute area. That's a really good trade, right? Let's say it comes up and you took it, and even this area here, when it pulls back to just go up here, that's a really good trade, right? Because you're still just looking for essentially structure breaks on a 5 minute, and that's all we got right here. Price goes up, breaks that line. As soon as it breaks that, that's a break of structure, and that's where you can start to see there's potential signs that price could go higher. Okay, and so just missed them. That was it's annoying to see it even like this, but. The other areas when we came through, what was that? This would have been 850 to 855. So like I said, price closed higher, so I identified it with that sign. Now, if you're gonna play a mitigation, you're gonna want to wait until that price pulls back and V-shape recovers, right? So it's like, let's say it extends up, it breaks the structure. Instead of just trying to play the breakout, you're gonna wait for a pullback in price. And so it's like, well, where do you wait to? Like, what areas are you looking for? At this point, your mind is kind of fixated on this is your 5 minute low, this is your 5 minute high, and now you're playing inner range liquidity, right? So you're looking for New York Opens that align with demand candles, right? So stuff like that, and then looking for timing, right? So a lot of times it happens in the first 15 minutes or the last 15 minutes of an hour, or 30s, right? 30s aren't bad, right? But those like right at 30, like at the halfway of an hour, price will react. So at this point, you had price closing higher, showing signs of strength and bullish price action, and then it comes back and comes right into the demand candle. That's also, like I said, in alignment with New York Open. There's also another setup in there as well. So when you come in here and you look at how that price responded, this is your 5 here on the left, this is your 1 minute on the right. Well, one thing I've learned from today, like you always want to be learning stuff, is that everything is fractal, right? So from a higher time frame perspective, when you're looking for like demand candles, a lot of times, or like these inefficiencies, like these are going to be the areas that when they align with point of interest that are going to respond the best, right? So you had demand here on the 5, and then you had this candle here was the one I was looking at on the 1 minute. right, going forward here into the future. So they kind of dip under the New York Open, right, but they're right inside that 5 minute demand area, and then they go and extend from 9:30 to 9:35 and make a new high, right? So on a line graph, structure wise, that would be price breaking structure, kind of showing strength, okay? And so like in this area, you start to frame up potentials, and you want to make sure you're inside the 5 minute demand candles alignment. So as I'm looking at that candle, let's see here, it would be right in here, I believe, right? And so you start to frame, and you're like, well, even if you got the candle here, right? Like if you took the entry right even here, when you're looking at that entry on a 5 minute, making sure you're inside that alignment, that's still pretty good. Because like if you move it down, let's say you took it right, like even in here, that's pretty good as well. But it's just like there's nothing wrong with being able to take it right here with using that New York Open as confirmation, like buying below New York Open, and then to see the extension up on that type of trade. All right, that was a pretty good one. And so where they manipulated here was, it's hard to see until you go back sometimes too, is we ended up going up, and this high essentially, it looked like it closed a little bit higher, like the 5 minute body, but when you go and look at the 1 minute, right, this is actually a lower high. So it's like it didn't actually go and break through, right, to show that real true sign of strength yet. So I thought this one was pretty good, right? And then the only other one that I talked about was I wasn't looking at lunchtime. Oh, this sells down at lunchtime. So let's see here. Where was this? Okay, yeah. So like, okay, so this was what I wanted to talk about. Yeah, this was a pretty good one today. So once they break the price down, they made this trendline liquidity in this area here, like 24,400. They push the price back up, and where they do it is they do it to this FEG imbalance, whatever you want to call it, right? But just looking between these two areas, right? So you're looking at the wick low here and then the wick here, okay? So that's a fair value gap. And so we're looking at that area, and they came into that area perfectly, right? And they also did it at the great time. So if you look at this was 11:05 going into 11:10, and then that 1 minute FU formation forms right in that area of 24,510 and just falls over and dies. And so the short that we ended up taking to close out, at least for me, what I was looking at for the day was from 24,500 down below to just this area. And I said, I'm not looking for more than just this area. I don't care if they go for LOD. This was the risk reward that made sense in that situation. And good thing, because it flipped and literally went crazy right after. All right. And then this was just an area that I was just eyeballing when I was at the gym, seeing if they were going to respect New York Open. And then obviously they did. They pushed price to above the daily open, right? And then they were trying to, I thought they were going to push the highs on day. So going into tomorrow, right, what am I kind of expecting? I'm expecting them to close the gaps on some of these ranges on the 4 hour, right? Like if we have the ability to go past 24,650 and start to close higher back into like this area here, 24,700, I could see us still reaching back for that 25,000. It just may take some time. And so let me look at the daily here. Yeah, I mean that's what I was telling myself too. Is like I don't know why. Like I said, I seen that 5 minute fair value gap, and I thought we could go like on the higher time frames when we came out for New York. I thought we could go down. You know, I thought we could go down to at least like 300 level. But like I said, that's just not what they wanted today. And then the way that they dug into the 4 hour candle here, let's see, right into this 4 hour area, where, and based on where it's at inside demand, this is just classic, like a little barcode on the H1, and then it finally pops out on a 4 hour. So it's just they're digging in the areas to make you pretty much play inside of a range, your 1 to 3, instead of trying to look for, you know, the structure break on the 15, the 5, or H1 or something like that. Sometimes it's just kind of like a pat and go type situation. So yeah, tomorrow's a new day. I would say the best thing you can do is just stay focused, stay focused on the structure, because that 4 hour area was pretty. Like I said, when you look at it on a 1 minute, it was pretty nice on just the entry, on how you could get in. Then it gave a re-entry situation inside the 5 minute candle, but it was just, you know, looking at the previous day. So, but I would definitely go in and look at. I know there's kind of a lot going on this right here, but the shorts, right? Like after price started to break down, they delivered the liquidity on higher time frames. Right, the shorts that came around 11:15 were actually really nice with how they filled the fair value gaps and just started breaking down. Because like playing to a liquidity, like let's just say for example, at 11, this was 11:08, so I was looking around here and I was seeing it in here. So I wasn't even looking for this until 11:45, right? So it looked just like this. So price was, where was that at? Right in here on the 5 minute. So it was in alignment with the 5 minute location of 24,475. And then the timing was right before the 5 minute candle had closed from 11:45 to 11:50. All right, so let's say you're looking for a 1 to 3 in that situation. And then the 1 to 5 was getting through the liquidity of that area. That's why I said, in the Telegram, it was like if we just get even through that area, this was still like a 1 to 4 situation, breaking that low and then being out. And then good thing, like if you can see on the 5, right, still pretty good location. But if it doesn't break out of the range and just go and start making new lows, right, then that's still a really good area of liquidity to target. And why we're targeting that type of liquidity is because it's just where retail noobs put their stop losses. Right, they see a double bottom. It goes like this, right? They enter in the market. They put their stop. The market will take their money, rally higher, and start the midi. Right. So it's just knowing, tops and bottoms, W patterns, M patterns. It's all about a game of risk and a game of where are people putting their risk. And so that's pretty much what I had seen for today. I could see it from a 15.5. The 15, like I said, it was a mitigation mantra. 15 minute wick, 5 minute dump, fast, and then 1 minute mitigation play. So it was beautiful. I got a lot going on. Let me take some of this stuff off really quick. Golly, there's so much stuff on here. Makes sense too, right? With dollar, let's see here, the dollar down day, right? Yes, we all are part of it, bro. It's all part of it, unfortunately, with the noob city. It happens to the best of us, bro. But we can work on it. There's just things you can. That's what I'm gonna sit here and do. I've got the whole day of things, of changes of what I gotta do. And so, yeah, but pretty easy day, right? I'm not gonna spend too much time on it. Tomorrow will be a new day, and look forward to seeing what we do tomorrow. So, last little look at the higher time frame, and we'll be out of here. And I'm gonna look at gold really quick too. Okay, cool. Let's look at gold really fast. trying to see how the market opens here. That was a sick fall from 5,000. I was thinking I didn't think it was gonna be 2 days worth. That was pretty cool. Okay, let's see. But yeah, we'll see what they print overnight. Honestly, I mean, I have no idea like what they're gonna do when they open. What kind of news do we have tomorrow? Today was the fireworks. I forgot. Fed chair speaks 12:30. They try to slip that in there as an orange folder. They're dirty. Let's see how they open. I think you can break down 2 contract systems, trying to figure out what my daily max is. Are you saying your 2 contracts? Okay. Think you can break down a 2 contract system. Are you saying just 2 contracts, like on one account, like 2 micros, so like $4 a point? Oh, okay, yeah. So on every order, let's just say, for example, one thing I'll tell you. Sometimes when I need to scale back, I go back to 15.5, and I only structure a 5 minute area that basically signs like I'll be like, for example, there'll be a sign of strength. All right, so there'll be something like this area situation here. It's in the last 15 minutes of the hour, and it's a 5 minute play, and so you've got your inside of like bullish structure. Price pulls back to a point of interest. You get a sign of strength. You play it, right. So you're saying with 2 contract system, right? So essentially, you would take the trade in the second candle, right, on the 5 minute after the sign of strength, 20 handle risk, right? And so that one would be a little bit tougher because I know that 5 minute wick is going to be like a 1 minute like mitigation type of area. But let's say, for example, you take a play like this, it's going to work the same exact way. So you're going to basically either shed, right? You're going to shed the 60 points. You just basically already have 1 contract there sitting, and then you go break even, or kind of like we had talked about, you just use the 2 contract system and you shoot for 3R, right? Like that's pretty much would be the goal. And so if you were saying about the numbers, so in that situation, the daily max loss of like your own personal DLL, I believe with 2 contract system, it's so you're thinking per trade, like what are you risking per trade, right? So if it's $4, I think it's $40, right? Or no, excuse me, every 10 would be 40, so it would be 80. So it's $80 per trade. And then, right, just to be just for the math, right? If you took 10 trades on a really tilty day, the math would still be $800 instead of the full 2,000 for the combines, if that makes sense, right? Because if you use 4 contracts, you're using $8 a point. $8 a point, essentially, with $10 risk or 20 point risk. Every 10 is 80, so every 20 is 160 on average, right? So if you go on tilt and you lose 10 trades in a day, that's $1,100 of $2,000 draw. So anything, like if you're using a system like that I use, anything past like a 4 contract system, anything past $400 in a day is detrimental to you until you build buffer. That's, if that makes sense. So with Top Step, I think the best way to do it is to do 4 accounts that you do on Copier, and then you have 1 account that you have for higher leveraged trades. but it's still the same system. So for example, if you're used to doing on copy trades like 4 contracts per per trade, then essentially what you could do with the higher leverage is go like 6 or 8 contracts and take way less trades, right? So maybe use like, I'm only going to take very high probability 15 minute, first 15 minutes, last 15-minute hour setups, and they have to be 5-minute setups where I just get a 1 to 3 bam. You know, that's kind of like where I'm moving even myself into, is looking for what's going to create less time under tension, like where I can still, it's worth your time sitting there, but it's like at the same time you're not sitting there long enough to cut yourself. Gotta be careful, I don't want YouTube to clap me. But does that kind of answer your question a little bit? You're basically going to go, it's looking at what Mark Douglas calls a series of trades, right? A sample size. And then you just go and play the system. If you see that, a 2-contract system, you're running, what is that? $4 a point, right? 2-contract system, you're running $4 a point. So you might look at it like this: $4 a point times 60, right? What is it? Let me see here. I'm trying to do the numbers on all of them really quick. So you might see that, right, with that system, that 240 is good enough, right? Like that might be good enough. Maybe you don't want to wait for the 1 to 5 to not like it delivers here, but to not deliver, right? And then you're left with maybe that 1.5. So you're still thinking from risk reward mindset. It's just the numbers change. That's all it is a little bit. Gotcha. Makes sense. 100%. Well, let's see. We'll see how they open, and then we'll probably head out. I'm so hungry now. They're open. Ooh, gap up. Wow. Already off to the races. Let's see all of them. And I feel like they all three, when you look at it like from this perspective, right? I feel like they all three could really raise up and fill these inefficiencies on the way up. They've cleaned up MNQs pretty good, but there's a nice one here on ES at 67.11, right? And also market open, so 46.750s on YM. So tomorrow's gonna be interesting. I think I want to just stop at 3 hours as far as. Yeah, bro. Yeah, I mean, because think about the math. Even myself, that's even what I'm telling myself, right? With 4 contracts, or if I like to do 6 or 8 on that one main, like a higher leverage one. Yeah, I mean, because 3R is enough. That's what it comes down to. Like, and a lot of the times, like a position. Let's say, for example, let's take this one. This was a good one, 5-minute, and it's at the right time, right? It's all about the timing to really be selective and condense down. But it's in the right location. When you think about higher time frame, it's in a 5-minute demand. It's below New York Open. Now that candle rises up 10:45 to 10:50, and then comes back into this candle on the 5-minute, right? Not even a 1-minute. Comes back into the area, and then it shoots up. Now the question: let's say you took a trade in that, 10:50 or 10:55. You took a trade in that close, right? And put your stop on to go to 1 to 3 or 1 to 5. It delivers, right? But more times out of not, right? When you're either, it doesn't even matter. When you're just trying to look for base hits, a lot more of the times you're gonna get that 1 to 3 to deliver, and it's gonna be a lot easier. And yes, there's gonna be that's where the hard part is of trading too, because you're like, kind of like my mentor Jordan Morgan asked me, a long time ago, was, how do you feel when you leave money on the table? Right? Like, are you going to feel a certain way, right? Or are you going to be repetitive at what you can produce? And so, like, yes, that 1 to 5 looks great from this situation, right? And it probably works out to be where you scale out, and then you're able to produce a good amount. And then you have to do it based on your numbers of where you're at. But there is a lot of times where, what I'll tell myself with a full volume trade, like let's say 4 contracts across, is I'm going to be like, okay, I'm going for, uh, the untapped fair value gap or the supply candle, but I'm not looking for much more than a 1 to 5 of what I'm risking, right? Because if they give me 5 times what I'm risking in one sitting, that's pretty good. Like, you know what I mean? And so, yeah, maybe, build some base hits with 1 to 3s and then come back and start shooting for some 1 to 5s. Then obviously, if you shoot for those 1 to 5s, and you've built some base hits with your 1 to 3s, run the system of the 1 to 5. So when it gets to your 1 to 3, cut half your volume, and then that's where I would say the difference that, I'll make, especially in this next coming week, is setting the TP for the remainder for wherever that 1 to 5 zone is. Like, I'm not really looking for it to shoot higher or do any of this or that or try to beat the markets or anything like that. I'm just looking for what the market wants to give me, right? And so that's something that, like, what I'm writing in my notes today, right, is like, if I'm gonna play that position for the 1 to 5 and I know I'm gonna cut half the volume, like I'm already gonna place it, then I'm gonna go ahead and place the take profit at that 5R spot, so I can go ahead and secure what I'm risking per trade all the time, right? And what that's gonna do is on those tilt days too, if you have like anything past 3R, you're on tilt. Anytime you've taken 3, like up there, like maybe you have a break even, whatever, but if you've taken 3, like full R setups, then you're on tilt. But if your system tells you, like I said, that like you're going most of the time for 3R wins, then maybe you can survive some of those days, but you're gonna want to keep it in that like 2R area on average. So, well, cool. I appreciate you guys. We'll see what tomorrow brings. We'll see what type of price they delivered. There's lots of inefficiencies on the way up here at the market open, 24,500. There's another one here on the 1 hour and the 15. Or excuse me, this is the 15 and the 5. There's inefficiencies on the way up, so I look forward to seeing them like probably fill those, but doesn't mean they have to. Okay. But yeah, no problem. I'll talk to you guys a little bit later. I gotta get some food in me. I went to the gym. I'm pretty sore, so I'll holler at y'all in a little bit.